Hello, I'm Caroline Taylor, the Director of Wealth Strategy for Carson Wealth Franklin Lakes, and let's get into this market and economic update. So what's really been happening out there? Basically, tech stocks got absolutely hammered last month. The Mag 7 giants, they were down 8.1% in February, and the broader markets felt the pain too. The Nasdaq dropped 4%, wiping out all of its gains for the year. The S&P 500 took a 1.4% hit, and crypto, Bitcoin went on a serious bender, starting the month over 102,000 before dropping back to 84,000 at the end of the month, which is basically like watching 18K vanish into thin air. Even Nvidia absolutely crushing their earnings and tech companies promising massive AI investments, investors still hit the sell button hard. So what spooked everyone? What's making everyone feel a little nervous? Basically, inflation came back with a vengeance, climbing up to 3.0%, and everyone thought we were finally getting it under control. Shopping habits also took a hit, so retail sales really slid about 1%, and online shopping dropped about twice that. And so what that means is that the average person is definitely worried. They're expecting prices to jump 4.3% in the next year, which is way up from the previous guess of just 3.3%. People are also saving a bit more, so 4.6% of income, but that's not, quite what it used to be, which was the 6.2% historical average. AKA, consumers are feeling the squeeze and they're bracing for impact. Behind the scenes, it's definitely a perfect storm. The new administration especially is shaking things up with tariff talk, and that's making everyone super nervous. It's also making the markets super volatile. Also, inflation isn't playing nice. It has investors biting their nails about whether the Fed is going to do what next. And even though companies reported decent profits, investors are playing it safe rather than sorry. So what do we have to look forward to? What are the bright spots here? Basically, not everything went south. Bonds, for once, actually had a stellar month. They were up 2.2%. And for anyone who's been yawning at bonds for years, they're finally proving their worth. This is why we're always preaching about diversification here. And even the boring, dependable sectors like healthcare and consumer staples and financials, they turned out to be the cool kids this month. They did pretty well. They didn't get invited to the tech party last year, but they're holding up just fine now. And here's a surprise. Almost all the sectors in the S&P 500 are still positive for the year despite February's drama. This is as of the end of February, not tech stocks though, unfortunately. So listen, markets are like weather in New England is a saying that we like to say. If you don't like what you see, just wait 5 minutes. The S&P 500 hit all-time highs as well in February, and then it also dropped. So this volatility is kind of just a feature of investing, and with this new administration, we've kind of seen this before where there is definitely more volatility happening. So what are we thinking? Don't ditch your long-term plan because of one wild month. Diversification is really the name of the game. It's your financial seatbelt when the market decides to take the scenic route. So let's just continue to try to weather the storm and hope for more positive months ahead.